not only do you have Bank of America beating on net interest income as well as on trading led by equities trading, very importantly, you have Bank of America giving guidance for what they expect to bring in net interest income later this year. They expect that number to jump from the $13.9 billion you're seeing in the second quarter to about $14.5 billion. So an increase through the end of the year in net interest income. That guidance is critical. What do they expect this to come from, John? That's the most interesting part. You remember maybe those held to maturity securities that have been dragging on Bank of America stock the last couple of years. They believe that they could reinvest these securities, and what we understand is about $10 billion roll off per quarter, so about $40 billion a year, now into higher yielding treasuries. This is also a reinvestment of assets like mortgage loans and auto loans that had been extended at lower interest rates, now moving into higher interest rate products. So higher for longer, helping Bank of America out. A little bit of a lift in the stock pre-market, as you can see. Of course, a strong read here across the board. Real quick note here on credit quality. You have provisions for loan losses meeting expectations, charge-offs about meeting, coming in just a little higher than expected. Charge-offs of $1.5 billion, relatively flat from the first quarter and up from $869 million in the second quarter of last year.